Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about JIANGSU Express interim report. JIANGSU Expressway Company Limited provides a wide range of businesses and services, including investment, construction, operation, and management of toll roads and bridges, passenger transportation along the toll road, advertising services, agriculture services, technology promotion and application services, generation and sale of clean energy power, sale of petroleum products, operation of service zones, property development and management services. These services are offered through various expressways, bridges and other infrastructure projects across China. The JIANGSU Express stock price has seen a notable increase in the past year, with shares rising by plus 19.56%. This growth is particularly significant when compared to its 52-week low of HK $7.56 on September 27, 2024, which it surpassed by 25% as of September 25, 2025. The primary drivers of revenue growth or decline can be summarized into three main categories. Revenue growth is primarily driven by effective cost reduction and efficiency measures, year-on-year increase in toll revenue, and intelligent transformation in road and bridge core businesses. Additionally, successful diesel discount campaigns at service areas and the Shanghai-Nanjing Expressway's 7.58% year-on-year operating revenue growth have contributed to revenue growth. On the other hand, revenue decline is primarily driven by industry policy adjustments, competition from alternative transportation options, market share reduction due to new roads and bridges, and toll revenue impact from national macro control policy or tax policy changes. Local economic factors, political factors, and market fluctuations also play a significant role in revenue decline. The mixed or unclear category includes various financial metrics that do not clearly indicate growth or decline, such as properties for sales decreasing in value, advances from sales of property received decreasing, and employee benefits payable increasing. The fluctuations in net income and profit margins of the company over the past year have been significant. Initially, net income increased by 17 million yuan, but this growth was short-lived as it decreased by 5.56% year-on-year. The decrease in net income continued with a drop of $554 million from $9.96 billion to $9.41 billion. However, there was an increase of 4.2% in net income later on. Profit margins also experienced changes, increasing by 3.14 percentage points to 33.17%. On the other hand, operating profit margin decreased from 35.24% to 32.51%. The conflicting statements regarding net income and profit margins changes may be due to different time periods or business segments being considered. The company's financial performance indicates a consistent generation of positive operating cash flow. The net cash inflow from operating activities has been steadily increasing over the past 2 years, with Yen 3,277,309,995.91 in 2025, and Yen 3,078,071,689.81 in 2024. This trend suggests that the company is effectively managing its operations to produce a surplus of cash, which can be used for various business purposes such as investments or debt repayment. The company's debt level and interest expenses have undergone fluctuations over the years. Initially, proceeds from borrowings decreased significantly by $786 million between 2024 and 2025, page 191. However, this trend was reversed on page 193, where it is stated that proceeds from borrowings increased by $386 million. Regarding interest expenses, there are mixed signals. On one hand, interest expenses decreased in some instances, such as a decrease of minus 33.6% between 2024 and 2025, page 189, and a reduction of $77 million on page 281. On the other hand, interest expenses increased by $114 million on page 311 and by 43% on page 312, due to borrowings from related parties. Overall, while there have been some decreases in debt level and interest expenses, the increases in these areas are significant enough to suggest that the company's financial situation is still a concern. Management is optimistic about the company's future prospects. They are focusing on smart transportation, technological innovation, and data integration to improve road capacity and emergency rescue services. The company is also exploring new models for high-speed industrial integration with logistics companies and local cultural tourism departments. In terms of clean energy, management is excited about breakthroughs in green and low-carbon technologies, which they believe will drive growth in the sector. They are also investing in digital products to enhance data value utilization and intelligent management capabilities. The company's financial performance has been strong, with a year-on-year increase in net cash flow from operating activities due to toll revenue and cost efficiency measures. Management is also investing in Bank of Jiangsu to improve fund utilization efficiency and create greater value for shareholders. However, management does express some concerns about lower-than-expected returns from road and bridge projects due to local economic and political factors. They are also cautious about investment risks in financial and quasi-financial products due to market fluctuations or systematic risks. The company has a history of paying dividends to its shareholders. In the most recent period, it paid out approximately Rm 168 million, representing a year-over-year decrease of 54.38%. This trend is consistently supported by multiple pages in the financial summary, confirming that dividend payments are a regular practice for the company. That concludes the financial summary for JIANGSU Express. Feel free to comment below, and I will be happy to answer them when possible.